Alright guys, apparently it starts to stream, so I'll just wait for a confirmation. Yeah, this thing's alive, so don't mind me for the little glitches at the beginning. Alright, apparently everything's okay, so if you can just confirm me that the resolution is fine, the audio is not crackling, anything like that, so that I can move on. Alright, apparently everything's fine. Alright, just one more confirmation would be nice. Gen Zones, I assume this is you. Anyway, greetings in France. So let's get it started. So today's topic is the one you picked. It's actually the one you guys picked last week. But as I want this Discord to be like a democracy, so basically the French guys voted for something else last week, so I had to choose to get to their choice rather than yours. But anyway, this week everyone is on the same page, so we get to talk about how to handle trades that doesn't go along the plan. The big major topic and also the title of this video is the limits of speculation, because this is actually the major topic we're going to cover today. Because what we do in here is not forecasting the future, not magically trying to make money out of nothing. We're just trying to risk manage, and this is like the usual name is called speculation, because we actually don't know a goddamn shit about what we're doing. We don't know a goddamn shit about the assets we're trading. All we're trying to do is to use a statistical risk limitation advantage to get the profit from the market by limiting the risks. What we take care of in here in this global strategy is a simple process. The markets are a beautiful money creation, monetary and economic monetary creation system. So the markets create money to spread to whoever's ready to go pick it up. So there is a simple question in here: do we make money out of the market? The answer is yes, but it is not that simple. In order to make money out of the market, then consider this like easy money to make. You know that easy solutions are always hiding something, so the problem is there is a pretty dangerous hidden risk with speculation. And the problem is there is some kind of a competition in this sector, and a huge amount of competition, which means easy money brings also the smartest people on earth to get to gather this money. And you need to understand that the most efficient traders are obviously gathering the biggest amount of money. This game is also pretty unfair, which means you have some guys we call market makers who have to handle such amounts of money so big that they do influence the market itself. Obviously, for those guys, the risks are different, because the impact they'll have, which will be much more complex than yours, so they have different problems to handle, but still they have their own problems, but they also have their own advantage. They do make the market, or at least can influence it. They have much more power than you will have as nasty speculators, because you don't know shit. You don't have money to influence the market, so you're basically in the weakest position in this competition. Still, does that mean that you cannot make money out of the markets? The answer is no. You can definitely make money, but it's just harder for you than it is for market makers, though still possible. So you need to think it that way. Easy monetary distribution system, everyone can gain, but some people will want to gain more. It's simple as that. It's in the human's behavior, natural behaviors, and I assume that this is probably the choice you guys will make next week, and I hope we'll talk about this topic. At least you guys choose, but in a normal structure, you guys probably will ask for this topic next week, which is the psychological topic, in which we're going to talk about humans' greed and how it works and how you need to fight that to be really efficient into trading, even though it might sound counterintuitive at all. Obviously it is. You will say, all right, greedy market makers, so greed is part of trading. Then no, it is part of some trader, but it's definitely, it must absolutely not be part of your own trading, because it's the biggest flow for retail traders and speculators like you and I are. So greed is a big problem, because in this competition, any mistake will be costly. So if you do mistakes, you're gonna have to pay for them. And I tend to say that those who make money out of speculation, which means you don't need to dig deeper into the assets you're buying or selling, all you do is trying to anticipate others' behavior using a technical statistical advantage, no more, no less. But, like I said, the market isn't just about that. If the market was rational, if the market investors were always making rational decision-making processes based off risk management and stuff like that, we will all be rich. And the market will never ever have to create some financial crises or things like that. But the reality is pretty much different from the actual speculative model. So in here, what we do take advantage of is not the model, it's the reality. So that's something you really need to understand in here. And we're going to dig deeper, but this is the actual conclusion I'm going to try to get down to in today's video, is that if you want to make money out of speculation, which is a very specific way that this is the only thing you can do. You cannot be a market maker, so you have no choice but to be a speculator. In order to be a retail profitable speculator, there's a few things you really need to master. You don't have to be the smartest person out there. That's most people think. It's an absolute misunderstanding of what actually is going on in here. Those who make money among speculators, not the smartest, even though they tend to be the smartest as well, is only the one that doesn't make the bad choices. So you're not being profitable because you're good. You're getting profitable because you're better than others. Simple as that. Better doesn't mean smarter. Just means that in the markets, most of the time the markets are considered to be like rational, all right? Which means the market uses its beautiful monetary creation system that everyone can benefit. So there's a lot of money to spare for everyone. Everyone can profit. We live in a beautiful world. Perfect. The reality is a little bit different, which means when it gets to speculation, you are the one with the highest level of handicap, the highest level of risk taking, because you don't know shit and you don't have access to anything. You don't have control over any fucking thing. So you will always be the one to pay for risk when the risk shows up, and when this beautiful monetary system doesn't work well, when it takes too much risk or gets into dangerous pricing schemes. And this is where you'll make the difference between those who will speculate efficiently and those who will survive. And the difference in here is pretty significantly different. Those who make money can make money for a few months. We've already been talking about that. What's easy, what seems to be controllable or under control, is generally means that you don't really get it, because good speculators will all have the same profiles. We all figured out one single fucking thing. There is not a goddamn thing to control. It's just by letting it go and accepting pure chaos that you'll actually manage to make money. Why is that? Simply because you'll get to release what's really holding you backward and making you and forcing you to make bad decision makings processes. And we already opened that door previously. We're going to just dig a little bit deeper today into those processes. These are natural human behaviors, all right? Remember, just as a reminder, the major topic is the one we talked about last week, actually. So uncertainty leads to needs for control, which is the natural first human reaction facing uncertainty. Uncertainty generates stress. To figure out that stress, you've got the oldest part of your brain, which is the reptilian area, which is going to take over control when you're under too heavy amounts of stresses. This is the thing that will make your decisions. And you certainly doesn't want to handle your money out of a reptilian brain. You most likely want to have cold-blooded decision when it comes out to monetary, to managing your money, all right? So the problem is, uncertainty will be just absolute persistence into trading, because trading is fucking chaos, and uncertainty will just be your absolute surrounding at every time. Just though it will trigger stress, though you will sometimes make irrational decisions. That's what leads the market to financial crises and the reality. The reality is that some people think the market are efficient. Some people think that by using robots, the market will be efficient. But it isn't. It's always driven by a set of actions. Today we're going to talk and introduce the second one. So, market uncertainty and the need for control over it are just the most simplest way to get to this problem, right? Lack of facing uncertainty. So your brains figure this out as being a lack of control. So what is it doing? Is trying to get control over any fucking thing they can get up to. So they always take the simplest way to do it. So people tend to believe that because RSI is over 70 or whatever shit this is, they can sell or whatever. So you try to get control over something that cannot be controlled. If you can't figure this out, huge problem. Like I said, some people may tend to believe I do control using this complex strategy, whatever. I don't control a goddamn thing, and I know, and I'm totally aware of that. All I do is highlighting areas in which the market is supposed to act rationally with a risk limitation. Sometimes it will, sometimes it won't. And this is how you handle the times when the market won't follow rational risk making, then will make the difference. So, do you see the elements I've tried to introduce so far or not? I'm asking you in here, it's a question. I would like you guys to participate. I've introduced three major topics in here, and I want you guys to understand what those are. Normally, I've been speaking enough for you to kind of understand the link between those elements. I would like you guys to just confirm that everything's fine at that point, that I can go a little bit further. I'm going to have to wait for a few seconds. There's like 10 to 15 seconds of delay, plus the time for you to type your messages. So we're just going to pause for a bit, waiting for your decisions, for your answers. Just give me a second. By the way, I'm going to do something else I need to do. Everything's fine. All right. So just to sum up the core informations, what you need to figure out at this point is that to be efficient in market, you need to be aware of your advantage and your disadvantages. Your biggest disadvantages are especially the fact that you are taking the heaviest amount of risk among all the market participants, because you're low capitalized. You're going to have most of the time to use leverage over your capital to sustain big position sizing. I'm not talking about leveraging, the dangerous way of leveraging. Most likely just you have a risk management, but you do have to use more money than you actually own. It's simple as that, right? When you're opening like 20 trades, even though each one of those trades is not leveraged, the globalized 10 to 20 position means you're exposed to the market with more money than you own, so you're leveraging. But everyone's leveraging today, even the hedge funds, so it's no big deal, right? It's how the market works nowadays, so you have to go according to the rule. Anyway, so low capitalized, have access to very few information, not to say you'll have access to informations later on, so other people get the information prior to you, so they have an edge on you. Other people are market makers, so they control at least a part of the market. They don't control shit, neither, but they do have a little bit more control over the pricing because they can market make, all right? So these guys have an edge on you. Definitely they have. Like I said, the market creates money for everyone, but these guys will want to take most of it. They'll be ready to spare a little bit for you when the markets are rational. When everything goes fine, everyone can make money, you included. And you need to have a strategy to profit from it. Simple as that. That's the moment where the market will be rational, everyone will be happy, and even you included, if you follow a strategy, will make money pretty easily. This is not the worst part of, this is not the tricky part of trading. Everyone can make money in those moments. The difference that will make your survivability into markets is how you handle when the markets doesn't behave rationally. This is how we dig a lot deeper, and this is today's topic. So I'm going to give you a few examples, like you might be familiar with the SPX because that's the biggest and the most explicit example I could take nowadays of markets' irrational behaviors. You know, I've been somehow fighting against the SPX over the course of the latest 2 years, but I haven't been doing this without limits. And this is the actual technical information I'm going to provide today. We're not just going to talk. I'm going to give you tips and tricks, actual stuff to put in motion right after watching this video. So like I said, when things won't go according to the plans, when the market may be irrational doesn't necessarily last long, but it can last way, way, way longer than what you would expect. And this is why you got to be putting limits. Just like we said, when the market goes irrational, it gets to switch from technical to psychological structures. Though in those structures, the most experienced traders will be more efficient than the beginners for simple reasons. These structures cannot be taught. I can try to teach you psychological behaviors in markets all day long. You won't be able to actually profit from it until you experienced it yourself. So it's kind of a practice and learn from mistakes system. So you want to be efficient with psychological structures in the market, you just have to face them, fail them first, and then profit from them. So it's really simple as that. The oldest traders take the money from the youngest in this area, and that is where the huge difference is made, because in here you can lose a bit of money. All right, most of the beginners will lose money in those irrational psychological contexts because they have to. It's a matter of having an edge on someone else. I do have an edge on you, and that's just fucking normal. I've been trading for way longer than you did, and I've learned from my own mistakes as well, and so will you. So if you want to run the car faster than you can actually do it, then you're just going to end up like crashing on the wall. So that's not what you need to be doing. When the market gets emotional, have a simple behavior. Just goddamn lower your leverage. It's as simple as it is. As you're beginning, the leverage is just how much you'll be ready to lose. And knowing that you have the lowest amount of risk limiting in those structures, because basically every other traders have an edge on you, the market makers, the experienced speculators, so everyone has an edge on you. So when those times on the market gets trickier, everyone wants to make money out of it, but it's trickier to make money. It's more dangerous, though the smartest and the more experienced traders will get that money easier than you will. So you're very likely going to lose. So it's just up to you to decide how much you want to lose. This is why, by limiting the leverage smartly, you'll figure out that, yes, you might lose because you have to lose to learn, but you'll lose less. So as you're beginning, this is really the smartest decision. You get to emotional market, you'll feel like it's passionating. It's something that you don't control and you want control over it. Just let it go. Really, really let it go. And the simple way to let it go is to experience it, but with the lowest possible leverages. But still, if you think that you need to step away from this, that's what you should do if you're an absolute beginner. But if you're getting like a yellow person into Discord, you really want to face those markets, but you really want to face them with the lowest possible leverages. All right? I hope this is understood. Now, the tips and tricks. How to take advantage of others. What's the difference between someone who's going to lose money and someone who's going to gain money over those structures? And let's be honest, this is all by itself another type of strategy I'm going to explain in here. It's aside from technical strategies. When the technical strategies gets to fail, even though, and we're staying on this, all right, you've respected the strategy, you've been risk limiting, you've been waiting for a technical area, you've had your signals, you've got the early price reaction, and then the market gets to wrong foot you. All right, this is where the psychological part of trading set itself. The technicals doesn't work according to the plan, which means even though you're supposed to be in a technical risk management area where other speculators, including market makers, are probably trading as well, then everything should do fine, but it doesn't. So something is altering the market doesn't behave rationally. That doesn't mean it's wrong. The market can be just slightly irrational for a couple days and then get back to normality, or let's not talk about days, but let's talk about a number of candles, though it doesn't depend on the time frame you're looking at. So let's say the market goes up to your invalidation level if you were selling, or down to your invalidation levels if you're buying. All right, it starts to rise the risk perception. Your brain instantly doesn't understand, because the strategy is here to get you the illusion of control, all right? Just enough for you to sleep tight at night. You'll say, all right, I don't know what the hell is going to happen tomorrow, but I've risk managed my trade, so out of 100 trades, everything should be fine. That doesn't mean this trade will win, and this one, all right? That's what the strategy does. The strategy just puts you back into a handleable, sustainable area of control over uncertainty. You don't control shit, but you control enough for you to sleep at night. Simple as that. All right? So when this thing doesn't work, you just lose your illusion of control, so your brain will instantly feel a high level of stress. Things don't go according to the plan, stress, though you want to control again. Your brain will instantly want control, so it will try to catch up on anything it can to bring back that illusion of control. So if you try to feed that need, you just don't get it. Because that's not the goddamn point. You want to make a rational decision that brings a sustainable level of control, but still, you don't chase control. We don't give a shit about control. Control is just the wrong answer to the wrong question. All right? You have to goddamn accept uncertainty. Sometimes the market will be irrational and you have to live with it. You just have to put it into a box, into a strategy all by itself. You've got your technical strategy. When it fails, you switch to a psychological strategy that has its own limits. In this one, the technicals get second stage. They're still important because you can't trade without signals. You always have to follow the strategy. You're just going to alter your strategies. This is where you get better at trading. This is not for beginners. This is for yellow guys I'm talking in here. You're going to get to switch to psychological. All right? Let's make it clear. If you're white or green into Discord, so you're raw beginners or you just get to learn the strategy, don't get your hands on this thing. It's way too complicated for you. When things go wrong, you trigger your fucking stop losses and you start again. When the market will be irrational, you're going to have this, like unfolded context. Remember the rule number one, when you're beginning, when you got unfolded both support and resistance context, you don't give a damn about those markets. You just move the hell out. When you get to be yellow and you get to have to learn psychological behaviors to be more profitable in trading, and this is what we're talking about. So when things goes wrong, it is not an instant switch. Like, you must get the hell out of black and white vision, get into shaded gray areas. Things go wrong, they reach out for your invalidation level, you need to assess the risk taking. Normally, if you got into trading, means that you should have had some hesitating signals, like taking profits or overload. You should have gray signals. So normally you're yellow, though you know that kind of signal must not be like more than 1 to 1.5% risk taking, though you have plenty of room to work with to adjust your risk. Risk is rising. That doesn't mean you have to trigger a stop loss. It means you need to assess whether or not it's rational, not rational, it's not the right one. It's profitable or not to trigger the stop loss. This is totally subjective, though it requires a little bit of experience, not for beginners, all right? But this is what will make the difference out of a good trader and a very good trader. Because a sustainable trader is the one that will be able to swim safely out of those dangerous waters. Right? This is what makes the difference, because those who don't know how to handle these irrational moments into trading are generally the one who fails. For a simple reason. Like I said, everyone can make money when everything's fine. It's when things doesn't go according to the plan that we'll see the difference. And this is what kills most traders. Most people just end up trading with a big loss because they weren't able to understand this. They failed on this. And some people will just get a big drawdown, like a 30% unexpected drawdown after years of successful trading, and they won't get it. Some people will get way beyond 30% drawdown. Some people will just be killed out of a couple bad decisions, because at this moment, just like a poker player will tilt, you'll absolutely tilt in the market because you get under those negative emotions brought by the lack of control. So, understand the process is the key in here. What is leading traders to bad decision-making processes when the markets are not acting technicals? They're acting psychological, and in those moments, it's tricky for everyone to make money, and others will be more efficient at doing it than you will. So, anything that is leading, just decrypt your emotions. Anything that will be linked to controlling or looking for a little bit of control, absolutely a bad decision, because you're just trying to fight uncertainty. You should just embrace it. How do you do this? It's necessarily going to be a fight, because technically speaking, your signal gets to be proven wrong. You should just get the fuck out, but you understand that something doesn't go right. You feel it, it's normal, and you say, all right, I'm going to just risk manage. But risk manage, just like any technical strategy, has to have its own limits. You have no limits, you're dead. Sooner or later, you'll just die. It can work fine like 9 times in a row. If the 10 times fails you, you will probably end up margin called. So that's exactly what you need to avoid. You must sustain in trading as long as possible. I'm not talking about months, I'm talking about years, I'm talking about living things that will occur once in a decade or even more than that. These things, rare, obviously, they rarely happen. You don't have to talk about them, but these are the things that makes the difference. These are the things that makes the trader who will survive and the one who will die or get the hell out of trading. So if you want to be among those who survive, you need to be prepared for those things. So how do they do? Fixing a goddamn limit. I'll tell you my limits so you can aspire for them. That doesn't mean you need to copy. You just need to inspire. My limits are simple. No matter what, no matter how much emotional I can get with the market, no matter how much work I can put in the scenario, no matter how much confidence I can have into a trading system or whatever shit this is, never more than 10% loss. Anytime I get a 10% loss, I'm cutting down the trade. No questions asked. That doesn't mean I'll be happy with it. I'll just kill the trade. Simple as that. You know I'm trading with a 50K account, which means it's a simple rule. It's a brain limit. Anytime I see a goddamn position making minus 5,000 euros, cut it down. Simple as that. You can't go anywhere beyond that. Anything beyond that, it's just too much risk for a single fucking trade. So you're not risk limiting in here. You're just, god damn it, I don't even know what you're doing, but this is nothing close to trading. So 10% loss on a trade, get the hell out. You're already way too far. So at this stage, don't try to make it rational. Don't try to make any kind of control over this. It's too late. You failed. Get the fuck out. 10% limits. So you can use whatever number it is, but I think 10% is definitely a limit that you should nearly cross, because we're talking about a single trade. Just imagine if you got 2 trades not going well at the same time, then that's a 20% drawdown. That's enormous. And you must not go anywhere beyond that. Let's imagine 3 trades, that's a 30% drawdown. It may happen into your trading career to have a 30% drawdown, but still, you'll survive. The goal is never to get to 100. So you think it cannot happen to 1 trade? It will obviously happen sooner or later. You think it cannot happen to 2 trades? It will. 3 trades? It probably will as well. 4, it gets rarer. So just limit the risk. 10% I think is the further you can get with a trade. You can put a tighter limit. I'll be fine with that. All right. Just found your suitable areas. These things are personal. I'm just sharing mines, and you'll make sure you get yours. But these are the limits you'll never ever fucking cross. This is the red line. You never cross this one. Put that goddamn number into your head. You know that any position that loses more than this number of euros, you get the fuck out. And purely simply this. The second rule is that you can reassess the scenario you've been trading just once. That's exactly what I've done with the SPX. In here, you guys traded this one with me, and I wanted you to see this. I wasn't nearly hoping for this market not to go according to my plan, but I'm glad it actually did, because you saw me failing live and you saw me reacting. And that's what I want you guys to be able to do someday in the future, because that's your goal, to get to trade just like I did. I failed, but I survived. Yes, I took a significant 8 to 9% drawdown. I got public with this. That wasn't nearly hidden. And now I'm even going way beyond that. I've been getting close to 15% in the worst case scenario right up here. It was on multiple trades, all right? Because I had obviously multiple assets traded in here. There was the dollar. All of these were having significant amount of drawdowns. I was close to capitulation. I was just about to let it go because too much losses on a single scenario. I got close to the limit, and then the market went to react. So now I'm fine. I got close to being out, but still, what you need to understand is that without those limits, those straight limits, things you cannot bend, it's not 10.5%. It's just you get to 10%. Anything that gets beyond that, just out. Right? The day it gets beyond that, close the position. Simple as that. Sometimes you will feel like this is the worst decision you just took. Like, imagine if I had to stop everything in here, Let's say one more week, just 1% to the upside. It's just nothing. But it would have crossed that line. I would have had to close all the remaining positions. And if the market reverses the day right after, what you'll feel is injustice, pain, whatever, all right? Still, if you don't put that limit, you're dead. Not today, maybe not tomorrow, maybe today if the market reverses just at 11% instead of 10, yes, you might have survived this day. Someday, you just won't. And this day will bring you out. And you just want to make sure this never happens. Or at least the risks for this to happen are so rare that they probably won't happen into your lifetime. We're not talking about once in a decade. We're talking about once in a lifetime. That's what we're dealing with in here. Anyway, so there are other things we need to understand. Though this, fixing a limit and doesn't change and do not change your scenario more than once. Like, remember what we traded in here. I was trading a market pullback because in here I had more than everything I needed. Validations, breakout. I was trend trading. So the trading scenario started in here where we were trading the trend channel. Though the first trade I made was like a pullback, all right, like a wave 4 structure. We're pulling back to resistances, though previous supports who may act as a resistance. I was waiting for technical signals. I had them in here. So pullback trade triggered in here. Then the Fed fucked me. All right, so it's irrational, it's stupid, I wouldn't nearly accept that, but still, the prices were proving me wrong. It was irrational, the market should nearly have paid for the Fed. The Fed was saying the market is under shitty pressure, so we're going to try to support it, but still, they were saying the market was shitty, so why the hell would we pay for this? So this was an irrational market behavior, at least to me it was, but anyway, it was just a signal that wasn't going according to the plan. This was actually a fucking tradable signal. No worries, it was. Not on a daily chart, it was a 4-hour signal. But the thing is that this is what I did. Out of the 4-hour signal, I decided to hold the trade to trade a daily range instead. So the goal was to say, all right, I'm going to maintain this position. And I'm going to try to take another position out of the 61% area. So this area I had another signal. So I took the goddamn trade. This was a 4-hour trade. This one was a daily trade. And to me, both of them were just fine. Really, really fine. And I stand on this. I would do the same thing if I had to do it over again. I have no regret about that. I took those trades and I would definitely take them anyway if it had to be happening again. At that point, I just changed a 4-hour scenario into a daily one. The daily one was set in 2 parts, this one and this one, because I didn't know if the market were bearish ranging or just ranging. Bearish range was 61% retracement in context, though this trade, and we needed trending signal, like this beautiful red divergence was everything I needed. The market decided to fuck this one as well after fucking this one. So 2 fucked up in a row without a single retracement and not even a risk management. That's what I thought was irrational because the market should have let me risk manage and it didn't. It was trapping me. And that's what I didn't like about this structure. What's made it dangerous. We were chasing the bears to rise from ashes, but without a single reason to rise. We were rising for that reason. Though irrational, but still it was happening. Though third and final trade was taken in here, and after that I did nothing but waiting for goddamn validation. It never happened, so I had to trigger a stop loss. A maximum stop loss in here, and you saw me taking that loss, and I had no choice but to do it. Absolutely no choice but to wait for another actually validated trading signal. And I did. So you need to understand that. That is key to success. The first limit is a limit per percentage loss of your capital. If you don't have this one, sooner or later, just one day, it may cost your entire assets, your entire capital, and you definitely don't want that. The second rule is that you can change a scenario from one time frame to a higher one just once. You just don't do it twice. When you get to fail the daily after failing the H4 time frame, you don't go to weekly, because what the hell is after weekly? Monthly, and then what's the limit? You need a limit. The limit is a percentage-based capital loss on any trade you trigger. All right. The second one is you can change a scenario just once, no matter how deep your conviction is, no matter how strong you think you can be, no matter how greedy you can be about the potential gain that may come out of here. If you change your scenario twice, it is no longer a scenario. You rather have like to cut the first one and start again later. All right, like cut the position and start another one later. But don't hold it, because the more you hold it, the more and the closest you get to the dangerous psychological biases like denial, fighting back, or whatever. Just get the hell away. It rather will put you safe again. And there are other markets to trade. I mean, if you took a 10% stop loss, just let it go with that market for a little while. You'll get back to it later. And if you miss the shot, then that's no big deal. Make your money elsewhere, all right? At some point, it doesn't worth the fight. You need to understand that. Fighting is good in trading because you have to, and especially on psychological market behaviors, you have to fight a bit, but not limitless. Those who do limitless in trading are the one that doesn't last long. Now we get to the final tip I'm going to give you in here. So these are the technical tips, all right? 2 limits. One of the way you can reshape the scenario just once, 1 percentage based. Second tip is that in order to handle emotions, you need to figure out something that is really, at least it's been key into my personal way of getting better at psychological structures into trading. Some people just think that you need to dampen your negative emotions. That's what I taught you, all right? You definitely need to dampen those negatively impacting emotions. You don't kill them. You're a fucking human being, so you're never going to be able to destroy those emotions. You'll feel them. You just need to make them and put them into controllable, not control, it's not the right word, into decent and sustainable areas in terms of amplitude. You need to get the fuck out of extreme emotions that will drive bad decisions. Now here's another tip. If you want to limit negative emotions, you rather want to like the dampen the positive expectations as well. This is why I said earlier, I hope you're going to take human greed and its problem in trading for your next choices. Is because human greed is as dangerous as the way humans fight uncertainty. You're going to have to search for control for uncertainty because that's your natural biases. But greed is also a very dangerous natural biases of human, and everyone is greedy. And the problem is markets are just like thriving for your greed. So it will be so tempting. And most of the time, I told you anything that is linked to the need for control is always, or most likely, like 99% of time, going to be a bad decision. All right? Now, anything that is leading to a big gain is also a very bad decision. So when you think about, all right, you know what, I'm going to fight against the market because the gain afterwards is going to be so big that I don't want to miss it. Now let me tell you something, you're rather wrong to let it go with that trade and let it go with that enormous gain you put it yourself ahead of. Because that's the kind of thing that can lead you to bad decision making either, as well. It's very, very dangerous. And if you want to fight negative emotions, then fight the positive ones as well. If you can forecast yourself to make a big, big trade, then you're generally already taking back decisions. So the way I want you to understand this is these are the 2 faces of a coin. They cannot be splitted. The one goes with the other. And it's really, really simple as that. You don't want to fight, you don't want to experience the need for control over too much uncertainty. You might rather like to accept chaos into your trading life and just make sure you make it manageable rather than controlled. Just do the same with your positive behaviors. Yes, it's fine to take a gain, but I see so many people bragging themselves about how good they've been working, how crazy good job they've made, how crazy good at trading they are. Fuck that. These guys are not traders. These guys are most likely commercial traders selling their dreams or selling whatever shitty coaching they might be selling you. So don't follow these guys. Like I told you, a trader is just someone who doesn't care. Is someone who has a set of emotional amplitude that is way, way sharper and shorter than the others. Simple as that. Most people get to like euphoric, just like they will panic. I'm not destroying those emotions, I'm just managing them. This is what makes me more efficient than you are. Simply because I'm more experienced into trading, I do feel those emotions in a day-to-day basis, otherwise I would just be a dead fucking human being, pointless living. Living is about emotion. The thing is that when I get to trading, I know how to decrypt those emotional systems, though I cannot be under their influence. I know how to recognize any system that leads to the need for control. Anytime I see this, I cut it down. So I'm not taking a decision out of these processes. I know exactly the same about the opposite. When I feel like I want to gain, because this gain is going to be enormous, I know I'm making a bad decision. But you really need to figure this one out. This one is a lot trickier than the previous one because everyone can figure out the problem. Generally, people don't figure it out the right way. They figure the problem, but they give it the simplest answer, like uncertainty, control. All right, the easiest solution. You feel the uncertainty, so you just want control. The stupidest decision you could make, but still the one that most people make. Just the same thing. You get a reward. You get a nice trade. You get a freakingly, objectively speaking, big gain. You might want to brag yourself. That's the easiest thing to do. You probably suffered a little bit of pain to get to this gain, all right? So you took some risk, you took some pain over this trade. Feeling the reward is just like normal. You will let yourself go into, oh, finally, oh, great. Don't be. I mean, when you make a big gain, does that really need to impact your life? No, it isn't. You must see this like I do, because every fucking trader, I mean talking about real traders, the ones that be sustaining in trading for years, not the one that will pass a few years selling their dreams and then fail and get the fuck out, all right? We all have the same things. We don't nearly give a shit about what we do. And you really need to understand, I don't feel any pleasure making a big gain, like I just don't feel any pain having to fight the market. I can sleep very well as long as my position sizing doesn't go below 5k per trade. I'm fine. As long as I don't switch my scenario 2 times over the biggest time frame, I'm freakingly fine. Yeah, some days are better than others. Yeah, definitely is. I need to be straightforward with you guys. I mean, when I have to fight the market, I would rather like it to stop, right? So I would definitely say, all right, if I have to choose, then please release me out of this thing. But I don't know. I know I have not a fucking control over this. I embraced chaos. I know that no matter what, I can't do any fucking thing with it. The only thing I can do is just not making a bad decision. And if you figure this out, you really, really understand the difference between those who will last and those who will fail sooner or later. It's as simple as that. That's what brings most traders out. Not because they don't get it with risk management. Everyone can get it. Getting technical risk management it's not easy, it's complex, but it's manageable. It's doable by almost everyone. Managing irrational market behaviors is how you'll make your difference over trading, is how you'll be way more profitable than the others. But the problem is, like I said, more profitable means you must not get into greed, because that's the exact opposite. If you're too greedy, that means you will pile up some risk that you don't yet see, and sooner or later they'll come up for you. So risk manage both into your technical strategy and your psychological behaviors. When it gets to psychological trading, everything is like subjective. So the traps are everywhere. All right, you can easily make mistakes in those areas. And like I said, more experienced traders probably already fell down those traps in the past. So they won't be failing here because they already did. So learn from experience. Accept the fact that to get experience, you're going to have to fall into most of those traps like everyone did in the past. To do it, make sure that whenever you get to come across speculative, irrational trading, into irrational markets that doesn't follow your plans and that doesn't follow technicals, market under influence, just lower the goddamn leverage. You want to feel this, so you do want to trade this, especially if you're a yellow guy. That's why I forced you guys to trade in those areas with the lowest possible leverages, so you get to feel it. And now before we get it closed, before we finish in this, I'm going to give you a practical example. Not to tell you what the hell is going to happen in the future, just to give you a glimpse of what may happen on a trade that those who are with me for long enough might remember, because that's a trade I've been impacted with. So like you say, I don't nearly give a shit about most of my trades. Just a few of my trades get to impact me. So, because they're generally the most trickiest one to handle, right? Those who gets to big losses, like close to those 10%. This is way I got to put myself at work, at hard work, all right? EURJPY. Most of you guys who are here for long enough might be remembering this one. I got profit taken earlier this year. Massive gain. Really massive gain. But did you see me bragging myself all over the web, saying, oh my goodness, I'm so good, everyone was wrong with the yen? No, I just said, all right, I took a big gain. The year is starting pretty great, and it pretty fucking did. But the thing is that I'm not taking extreme positive emotion out of here. I just made my fucking job. The way I see trading is risk and reward. Not euphoric and panic, not happy and unhappy. This is not how it works. To me, I get a reward because I took a risk. As long as this risk is manageable, I'll take it. When the risk gets out of control, I don't get it. I just release it. The risk sometimes shows up, you gotta have to pay for it, and that's how it works. Manage your risk, both psychological and technical. In here, how did it happen? It was absolutely a psychological structure. So let me just highlight you how this thing works. All right, to me, EURJPY is bearish. We're probably going to go down this area, so there's still a lot of bearishness. Oh, not a lot of bearishness, but still a bit of bearishness to come. I'm not necessarily yet sure if we're going to break down this low. I think we might be building a dip in this area, or if it doesn't, then it's going to be there, definitely. I just don't know if this is this trend channel, so the daily support channel, support context that will be bought, or if this is clearly going to be the weekly. I don't know, all right? These are the two technical areas I was trading back in the days, but still, I had a first profit taking close to this area, so not at the lows, but slightly below it, slightly above it. And I initiated the scenario here. All right, this is the area I started looking at selling the EURJPY. Weekly based trade, though I know it will be a long shot, but still, what did I do? My goddamn fucking job. In here, triangle, exit signal. If I don't take that trade, I'm just not respecting the strategy. So I took the goddamn trades without even thinking about it. All right? I know I didn't take the trade on the weekly chart based because obviously I'm more aggressive, so I was trading daily signals in here. Anyway, that's the first selling entry I made on the EURJPY. All right? Though, just understand the timing. 31st of July approximates time to get there. The actual profit taking, it was a freaking gain, all right? Everything has been done in public. Everyone knew about my exposition, my sizing, and everything like that. So I'm not bragging myself, but it was a pretty decent gain. Point, all right? I'm not giving you numbers to just sell you some dreams or whatever. Just a good gain. I got here, profit taken, all right? Now, entering in here until there, the trade was under risk management, all right? So consider this as a psychological management area at the initialization of this trading scenario to its actual positive outcome. All right, so this is the area, all right? I'm going to go neutral zone. No, I'm going to go cycle zone. It's going to be easier for you to figure out. All right, so actually, it's when we closed in here below, when we broke this candle low, this is where everyone figured out that EURJPY was bearish. There was a consensus, though I got to my profit taking, all right? Anything prior to this was just hesitation, all right? So oscillation between it's going to work or it's not going to work, it's going to work, it's not going to work, it's going to work, it's not going to work, it's going to work, it's not going to work. The problem is in here I might have made a few mistakes by getting a little bit too aggressive in here and taking two big reinforcements who put me down the corner of these maximum losses, because I was finally exposed to the market in all this area, took some partial profit takings, everything was just fine, but I took some reinforcement in there, probably way too early, that put me down the corner in here, because I had an average price like there, right? Average price was like here, not a very good job, probably too much aggressivity, and still, I'm not perfect, I'm making mistakes, but I want you to understand the process, all right? So I was below the water level because the market was oscillating both positive and negative, though, am I right or wrong? I just don't know, right? At this point, all I care about is risk and reward. Is the potential reward worth the risk taking? If the answer is yes, I'm still in the trade. If the answer is no, I quit the trade. And is the risk manageable? If the answer is yes, I stay in. If the answer is no, I get the fuck out. And in here, we got close to too much risk, but not enough. So I stood in. And this is what happened. So on the lifetime of this scenario, just one out of 74 bars actually got to prove me right. Just one out of 74. Can you imagine? It's more than 95%. More. So I was either about to be proven wrong or hesitating 95% of times to just be proven right the remaining 5% of time. Would you want to be the people who get to be proven right 95% of time and fail hard the 5 remaining percents, or would you rather like to be the opposite? I personally know the answer because it took me quite some time to figure this out. The only difference in here is what you will feel in all those 74 bars. This is time, and you are a human being. You'll be impacted by many things. External life contexts, your personal emotional feelings about the markets, whatever, your inexperience with emotions and stuff like that, they will all impact the way you trade, and they can make a significant amount of difference. Because if you, for example, triggered a 7% loss in here because you say, all right, it's too much for me to handle, I cannot sleep with that EURJPY position, I need to get the fuck out, I need to release the energy to regain control. Yeah, take that decision. To me, it's a bad decision. Clearly, it is. At least it's not a cold-blooded, driven decision, though it's probably a bad decision, all right? At least you left the door open for someone to profit from your bad decision. And someone would probably be doing this. I didn't, and you know the end. The end was a freaking good game because I was leveraged, though those 8% went, it wasn't an 8% movement, actually. It was a bit less than that because our profit took a little bit earlier, but it was approximately 7% with leverage. Sorry, I'm not going to give you the leverage because you're going to, it's leverage free. So you can multiply that by 3 and you know how much you gain on this scenario. So the thing is that, yes, it's not enormous, but 20% is a pretty fucking decent gain, though. Still, the thing is that if you can sustain to lower your emotional amplitude, as speculative trading can be up to 95% of putting you under pressure to just prove you right 5 remaining percents of time, then this is how you can be inefficient and where someone more experienced than you will. And that makes a huge difference. Because the problem in here is that the door is open for every fucking thing. Like, it's been so hard to manage this trade, and at some point you're going to say, all right, it just doesn't work, so maybe I should reverse. And you get to take all the risks, get in here, reverse, and get entirely fucked up. And that is the worst ever case scenario. This is why I told you, you'd rather like to be proven wrong rather than changing your mind. You don't change your mind into trading. The only thing that can change your mind is your maximum drawdown, your stop losses, or stuff like that. You don't change your mind because it's too much of a bargain, too much of a burden to be in this trade. Too much of a burden, just make that rational. What is that? What is that burden? Is that a too big loss? Then if it is it reaching your limits? If the answer is yes, then take the trade down. If it doesn't, then let it go and just pass it into something else. This stress is irrational and you don't need to act because of it. All right? Simple as that. Then your trading is in here. Your target was in here. Is this still doable? The answer is yes. So why the hell would you get out of this trade? You're not taking your maximum losses and you still can make that gain. It's not an irrational gain, all right? I wasn't risking to get a 400% gain like some people will do on cryptocurrencies. Like they say, all right, it's no big deal. I might be risking 20% capital, but it's to get a 400 times. Like I'm going to make it 5 times my capital on this. What the hell? What the fucking hell? This is not trading. You don't risk 20% on a trade. That's not how it works. If you're ready to risk 20%, then someday you will be risking 30 and you'll find that acceptable. No fucking way. So don't go down this road. Definitely don't. When the gain is irrational, your decision-making process is irrational by the roots. So fight it, all right? Fight the positive emotions, and you'll also be able to effectively fight the negative emotions as well. So this is my final tip. And like I said, I just opened the door expecting for you next week to vote for humans' natural behavior toward greed, because that will be like a part 2 of what I just introduced today. Obviously, we're going to dig a lot deeper into this because there are lots of things that we need to talk about these specific topics. We've been talking about the negative emotions, yes, but like I said, greed, most people think it as a positive emotion. I'll tell you how much that can be positive, but how much negatively impacting this can be, just like greed, just like uncertainty and all those things. So anyway, do you guys have any questions? So I'll leave you a few seconds to put your questions into text. If you have some, don't hesitate to ask questions. There are no bad questions, never. Every question is a good question. Oh, I see a freeze. I don't know if the streaming's doing fine. Shit. Apparently it feels like it's fine. So if anything is not clear, I really would like you guys to jump on board and say, I cannot necessarily anticipate all your questions, so I'm trying to anticipate most of them, but still, I need you if necessary. So you need to understand this, all right? Feeling pain in trading isn't normal. You must not feel pain. Like you must not feel gorgeous happiness or whatever thing this is. All those emotions, both of them are negative. Though some people will say, all right, you took a nice gain, be happy with it. Then just don't be. You must not be happy with a gain. You must just be, all right, I've done my job, end of the story. Like I said, sometimes, and it really has to be, and it really is the case to me recently, like, yes, this year doesn't fit the plan. This year clearly doesn't follow the path of previous years. Instead of having a regular profit curve, all right, making money every day in a smooth manner, this year is just a fucking roller coaster. Like it started with those yens gain, and to be honest, I didn't just have the EURJPY, I had the USD JPY and other JPY pairs. So the year started crazy, like real crazy. And then this, all right, so selling in the US, being pain traded after pain traded, 10% maximum stop loss triggered. It really has been a struggle. All right, now it's a struggle with the euro dollar, it's a struggle with the GBP US dollar. It's a fucking struggling year to me. Still, do you see me going out of control? No, that doesn't mean I have any control. It's just I'm still in my sustainable control area. My tiny bit of area in which I still do my job. I know where I'll stop if I get to be proven wrong, and we still haven't got there. We got close to it, but not beyond it. I also know that the potential gain is not irrational. It's totally rational. I'm not talking about the market just spitting its money and dying like riots in the streets. All I think is the market will have probably a sudden drop that will probably get below 2,000 in the SPX, though it's not irrational and it's not going to bring me 4 times the amount of my account. I'm not going to make the decade gain out of this. I'm just going to be rewarded for my work. And if it happens, people will go all over the social networks. Some people will put me as a god. Some people will say Phil was selling for 2 years and he probably lost more than he gained in the overall process. People will talk and I won't nearly give a shit. Simply because I'm not bragging myself when I get right. I'm not putting myself into pity when I get to be pushed to my limits. As long as those limits are not crossed, I'm doing my job. As long as I take a gain, I've done my job as well. And you really need to figure this out. Like, you hear me say it, but before you actually get to put it in motion into your own trading, it takes years. I just wanted to explain what my personal process have been to get to this, so you can eventually profit from my experience to be a little bit faster into your own processes. But if you don't get your hands on the dirt, you'll never get to learn. But you don't get to learn if you're not yet experienced to do it. I stand on this, and that is really, really important. And I'll set that as a conclusion. If you're just learning trading, like you got less than a year or less than a year and a half into trading, if you don't yet master a strategy, if you don't yet figure out what risk management is, technical risk management, don't get your hands into psychological stuff. You're way too immature to do it. And you rather want to master the technical part of trading first. Because, like I said, most of the time the markets still are rational. And in those moments, you want to have an hedge, a technical statistical hedge, to at least profit from the moments where the market is rational. And to get fully profitable, then you're going to have to learn to be effective with psychological management of trading. But that comes at the second part. Is that really clear to you in here? And I'm going to set a final stuff. Some people tend to believe that psychological behaviors in trading is not necessary. We can stick to the first part, like the technical part, and you can just leave the emotional part for robots. Then that's another topic that we'll cover as well, because I'm offering you 3 choices into the into your votes into Discord. So this one was the technical option. We do have a philosophical option, a psychological option, and a technical option each and every week, right? So you took care of choosing the technical one, which means next week I'll give you another topic on technicals. I can tease you already. This will be about robots. So how crazy fucking stupid that is to think that you can spoil the psychological part in trading by just using robots. This is not how it works. Even behind robots, there is a lot of psychology. And if you think you can skip that part and be a very efficient and profitable trader without learning psychology, then good luck on that. You might want to learn that the hard way sooner or later. Anyway, so that will be another topic. I still invite you guys to choose greed system understanding for next week, and hopefully we'll take care of the robots the week right after. But still, democracy, you guys will make your own choices. So you do whatever you want. I'll do what you ask me to do. So, do you think there is still time to put some recession trades on the major indices and pullbacks? Yes, there are those pullbacks. You can do it. I think there is a decent risk management, but not nowadays. The decent risk management were yesterday. The problem is it was with Trump trying to manipulate the market. So it was volatile, it was stupid and irrational. This is why I decided not to send a notification to sell, because most people would have been unable to handle this. I know most of you guys are beginners, so I just sincerely decided not to do it. All right? I want this to be really clear, all right? I've done that on purpose. I haven't been reinforcing myself. I was really hesitating to do it. I decided not to do, and moreover, I decided to send you a notification to tell you to just stand by, because we're trading a really tricky area. We might be reversing the paradigm today, but who knows? So it's really complicated, and trading this area. So think risk reward. Where's the reward? Like I said, the reward is to break down this low and seeking for support, probably out of those previous tops. And I think regarding the momentum we'll have at this point, I think we go even below it. So probably chasing below those supports and probably getting down to the 2000 because it's an emotional level. Though I think this is the area we're probably going to start finding some potential suitable supports. Though these are the areas where you need to take out the fucking trades. The bearish trades must be taking profit in this area. You're not seeking for the bottom. You're just seeking for a taking profit area. You're not going to exit at the lows. Don't think of it. Right? You're just going to exit in a technical area where the risk doesn't worth getting in longer, staying in longer. Right? So I think this is the area where the bear trades must be taken out. So if that is the reward area, right? Think of it that way. Rewarding area, somewhere in there, you're going to profit take depending on signals and whatever the price will do to get there. We don't have this information yet. We don't yet know if it's even going to happen. So don't go too far. Just risk manage, all right? So if you do this thing, obviously there is a stop loss that might be set in here. If you're very aggressive at the market top, if you want to let a little bit of room for the price to work with, you will set a stop loss at 3,100, all right? So risk fucking reward. Does that worth a selling entry? Yes. Do you have a signal to do it? Yes, there was a signal, so you can catch up on this signal. I think nowadays a little bit late, but still, yes, there is a trade. Does that mean I'm telling you, sell right now, all your assets? No, there is a speculative trade. I'm a speculator, which means what I could do in this area is risking 1% of my capital for this trade. I'm already risking that as I'm already in because I anticipated this weekly signal by trading daily signals in those areas. This is because I do my job. So it's simple as that, all right? I got to top the market top because I was more aggressive, though I took more risk, but now I don't need to reinforce before we actually get to confirm this thing. What we've done last week is a very ugly or lower shadow candle. Until we get to invalidate this, I can't stress how risky that is for me to reinforce. But if you have no trades, you can take one. Just make sure you're taking a reliable amount of risk with it. We're doing speculative things in here. Remember how irrational the market has been in the past? It could very well be irrational in here again on the weekly chart time frame. That wouldn't necessarily shock me. All I would say is that I've tried H4 time frames, stopped. H1, moved to daily, stopped. Now I'm trading the weekly. If the weekly gets invalidated, you think what? I'm going to go monthly? No, I'm just going to let it fucking go. And I don't nearly will give a shit about where the stock market will be. If it invalidates this weekly signal, then the market gets irrational into a weekly basis, and I've never seen anything like that. So I'm just going to let it go, all right? Anyway, it doesn't worth the shot anymore. It doesn't worth the risk, all right? So, like I said, the market can be even more irrational than that. It can go pretty vertical. It can just work out this area for a couple quarters before actually surrendering the gains. I don't know. The future will give me more information. All I can tell you is that at the current time, risking 1% of your capital or 2 to 3% maximum, yes, that's speculation. We're in a tradable area. We do have suitable trading signal in a context that actually match that signal. So yes, to me, it's okay, but with the risk management that goes along. A speculative trading risk management. You don't bet on the future. You don't sell your house because of it. Right? It's really simple as that. The scenario may work. The scenario may not work. Who fucking knows? All right? Though, if you trade EURUSD pair like USD-JPY, do you have to trade a EURUSD pair as well to get to euro? No. You get rewarded by the broker. But that, now that's weird. You should be doing such thing. Or unless your currency gets to be hugely devaluated. But normally you still get euros. I don't really get your question. You need to be more precise. There is still time, so this one I understood. Great, thank you. Maybe look for pullbacks on the lower channel. Yes. That's totally possible. But I would say, just like I told you today in Discord, at least wait for 2 days candle close. It's gonna give you more information. If today is, like I think, probably going to be an inside bar day, hesitation candle, then wait for tomorrow, and eventually tomorrow evening I'll be able to give you a decision to eventually take an overweek trade. But still, right now, even for beginners, I suggest just waiting for a clearer sight really is the most reliable option. Just look at the targets. You still have plenty of prices that will be considered acceptable to try to take profit from this scenario. And like I said, this is just a scenario. Who knows what actually will happen? I don't know. I'm not having any control over the possible recession or whatever. All I can tell is that fundamental signals suggest this is possible, technical suggest this is over, and we're in a speculative area that is giving us signals. So we're overbought into a very nasty macroeconomical and geopolitical context. Normally, we should get to retrace the supports first and probably reverse. So I'm waiting for this. We've gotten down to the support last week. I partial profit took, so I secured my trades, and now I'm waiting to see if I'm reinforcing or not. That's exactly the current context I am right now. I'm just waiting for further information to eventually sell again, knowing that I profit took in this area. So even if I have to sell here next week, I'll just be selling the prices I profit took earlier. So that doesn't change anything to me. All I'm caring is to ride down this possible trend that may emerge, but at the current time, we have no trend. We're just eventually preparing for it at best. All right, we're getting out of today's topic. I should nearly answer technical questions today, or not that kind of technical questions. So if you have other questions surrounding today's topic, just let me know. Otherwise, we'll stop it right here. Oh, and Jam, by the way, regarding the SPX, if you understood the lessons of the EURJPY trade, like I said, I started selling the US in here. Here we are today. If the end ends up being, I don't know how long we can work this area, but imagine that the end is this. All right, well, not necessarily this, but let's say in 3 or 4 weeks, we get straight down this area, like the panic selling of 1987, for example. And just as a quick joke, all right, I'm born the 19th of October, 1987. So the day of this beautiful crash back in those days. So it would be just fun to experience that nowadays. So just kidding. But imagine that, all right? A sharp falling, just like the EURJPY or the USDJPY, something goes out of control. Even though people will say that's not normal, that's irrational, it shouldn't happen, that's not normal. Then this shouldn't have happened either to me. So it's just the two faces of a coin. Some people have been irrationally bullish in the market, so the market being irrationally bearish afterwards would just be the opposite face of the coin. I wouldn't necessarily be surprised about that. The thing is that I saw the structure, I want to profit from it. Is that going to happen? Eventually, I don't know for sure. Nothing is for sure in markets. So I just need to risk manage ahead of that potential irrational bearish movement in the markets. All right, and like I said, take the example of EURJPY and USDJPY. It may be risk managing and oscillating of my prices for 95% of times, because I bet this is what will happen in those structures. All I care is to be proven right the remaining 5% and not taking too much risks in between. Get to understand that, and you'll get to understand how I can sleep every night. Because I don't nearly give a shit. I could be driving myself crazy with this. Really, I could. Really, really. Like, you have a look at my account today, nowadays, it just goes up and down, up and down, up and down, because Wall Street does this, does that. One week I'm positive for 10 to 12%, the other day I go negative by 5. So it's just, they're oscillating off my entry prices. All right? All I care is the day the trend triggers. If it triggers against me, I'm off. I'll probably take a big loss. Yes, if the day it triggers my side, I'll be able to reinforce safely, get to profit from everyone else's panic, And guess what? I won't go over the social network to brag myself. I'll just say, once again, I done my fucking job. Yes, because you're trading in US dollar. All right, so definitely yes. When you're selling USD GPY, as you get to pull back the gains in euro afterwards, then yes, you get to lose part of your gains in terms of asset value. All right, that's simple as that. But still, you got to increase your amounts of euros. If your account was in euro, even if euro USD dropped, still you had more euros. All right, it's a relative thing. You need to understand that the forex is not an instantaneous thing. All right. Anyway, I'm not even answering that question right here, right now. It's already a long and way longer than expected podcast. So we're going to stop here. This question is off topic. It's interesting though, but we're not going to answer this right now. I wish you guys a pleasant day. We're going to stop here before shifting and drifting away to another topic. So later, guys. See you soon. And once again, trade smart. Don't try to go for easy solutions. They're generally the worst case scenarios.